Why volatile assets in your IRA accounts can significantly help the long-term tax efficiency of your financial plan. As a CFP professional that's helped thousands of families over 14 years in the industry, I often see clients miss out on a powerful tax-saving strategy that's sitting just in plain sight. Volatile investments can be your secret weapon in long-term tax planning when strategically placed in IRA accounts. Here's why this works. So volatile assets are just that. You'll see wide fluctuations in the price of those assets. Oftentimes this comes when maybe there's a short-term uncertainty of exactly what the future of that asset holds. So important here, you don't want to put all of your account into one particular security in order for this strategy to work. You want to make sure that you do have a risk tolerance that is appropriate to your goals and your desires and your just overall comfort level with risk. However, as that asset goes up and down in value, if the downs do occur, you can use that as an opportunity to convert those assets that are in your IRA account over into Roth. Now, why would you do this? So the way that a Roth conversion works is the value of that Roth conversion is generally determined based on the closing value of that asset. So if you're invested in a volatile asset, and let's say it's down 20%, well, you have the opportunity where you can strategically take that asset that is at a depressed value and you can convert it over into a Roth. Now, important point here, you have to pay ordinary income taxes on whatever the value is that you converted to the Roth. The beauty is, if it is at a declined value, you will be converting at a lower value. Once that asset is in a Roth account, however, the growth would be tax-free. Now, by no means is it ever a guarantee that the asset will recover, which goes back to the importance of making sure you have a balanced investment strategy and priority so that your entire portfolio isn't fluctuating all over the place. But strategically, it does put you in a position where you can convert assets over time into the tax-free Roth account and allowing for maximized tax-free growth in the Roth IRA. So as assets recover in the Roth IRA, you can diversify those assets into perhaps less volatile assets and then replace assets in your IRA with the volatile assets. So you're still balancing your main investment objectives. And then you can just rinse and repeat as those assets ebb and flow. As they ebb, you can convert those over to Roth. And then as the recovery happens, you can diversify. So this allows you to get really discounted tax-free growth, which is awesome. Now, if you're looking for help with a strategy like this on how to maximize tax efficiency in your retirement portfolio, feel free to schedule a call with me using the link in my bio.